Hello friends, I am very happy to see you in this new video. While many investors gravitate towards ETFs that replicate the performance of the CAC 40 or the S&P 500, there are ETFs that offer thematic exposure that allow you to think outside the box and invest in the megatrends of 2023, or areas that have strong potential in the years to come. In this movie, we will introduce you to 3 ETFs that you may not be aware of and that will allow you to combine your vision of the future with your investments. ETFs for investing in private equity. Private equity is the term used to describe all investment activities in companies that are not listed on the stock exchange. It can be investments in promising startups or in larger companies that are not listed on the stock exchange but that open their capital to new investors. For a long time, the preferred investment of wealth management companies and private banks, this type of investment solution usually requires significant capital, several million euros. Indeed, unlike listed companies that will seek funding from thousands of small investors, unlisted companies will prefer to address a handful of hand-picked investors who are capable of financing the company's project alone. Let's keep in mind that most of the SMEs are not listed on the stock market, but there are some real nuggets among these companies, which may be listed on the stock market later. Unless you are a multi-millionaire and very well advised, there are no real solutions to access this type of investment. On the other hand, there is an ETF that allows you to invest in funds that invest mostly in private equity, the Flex Shares Listed Private Equity ETF. With more than 80% invested in financial companies, private equity management companies, and mainly in American and Canadian companies, this ETF allows you to invest in almost 100 of the largest companies specialized in private equity. This ETF has a fee of 0.40% per year and is composed of 82 stocks. It is available in dollars on Euronext Amsterdam under the Bloomberg code FLPENA. This ETF offers physical replication and dividends are reinvested in the fund. More than $145 million is invested in this ETF as of January 30, 2023. ETFs for investing in artificial intelligence. You have probably noticed that artificial intelligence is taking an increasingly important place in the world we live in, but it is still sometimes difficult to properly invest your money in this new sector. Sure, it's possible to buy tech stocks, or invest in the startups that are coming out with innovative AI solutions, but that's no guarantee that you're invested in the company that may be the leader in the field in the next few decades. While 90% of business leaders believe AI represents a business opportunity for their business, according to a BCG study, an enterprise AI adoption jumped plus 270% between 2015 and 2019. According to a Gartner report, the AI market is expected to reach $267 billion by 2027. The adoption phenomenon of ChatGPT, which accumulates 1 million users in just 5 days, while it took Twitter 2 years to achieve the same result, is proof of a real craze for this new technology. The ROAI ETF, Robotics and AI UCITS ETF, provides exposure to companies that are active in the field of artificial intelligence or robotics. Invested in companies such as Oracle or VMware, this ETF is mainly invested in the USA, 75%, and takes SRI criteria into consideration in its investment choices. This ETF has fees of 0.40% per year and is composed of 150 stocks. It is available in Euro on Euronext Paris with the mnemonic code ROAI. This ETF offers synthetic replication and dividends are reinvested in the fund. More than $250 million is invested in this ETF as of January 30, 2023. ETFs for investing in hydrogen. As the price of energy is at the heart of the issues that started in 2022 and more electric vehicles are replacing gasoline, diesel cars, the energy source that could become the solution to global warming to power our cars, planes, homes could be hydrogen. More and more companies in different sectors are looking at hydrogen, a natural resource that could become the fuel and carbon-free energy source we need in the future. Hydrogen is increasingly seen as an essential substitute for fossil fuels in a carbon-free future, with massive support from governments around the world. In 2023, the hydrogen sector is at a similar stage to that of early-stage technology sectors. While it may now be too late to invest in the electric vehicle sector, investors who believe that hydrogen will be the next revolution in the energy transition should take a closer look at the investment opportunities in this theme. This ETF offers a rather balanced exposure between the US, the UK, France and Norway with companies we know well like Air Liquide or McPhee Energy. This ETF has a fee of 0.55% per year and is composed of 26 stocks. It is available in Euro on Deutsche Bourse under the Bloomberg code HDR0GY. This ETF offers physical replication and dividends are reinvested in the fund. More than $110 million is invested in this ETF as of January 30, 2023.